All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Wednesday, May 5th. So let's get to the price action for the day. Risk disclaimer first. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. This video is for education purposes only, and if the video is a little blurry, it's because YouTube has not rendered the high-def version yet. Give it some time, and that will take place with YouTube. All right, so let's break down the numbers first. SPY finished basically flat on the day. We'll just call it flat. Q's finished down on the day, down 34 basis points. Is that right? Yeah. And IWM also finished down about the same, excuse me, and the Dow once again outperformed. Remember, that was something that we talked about in the macro member TTG video from the weekend, right? I think I also talked a little bit about that in one of these regular end of day videos as well. The Dow the Dow chart just looked a little bit more constructive. We'll review that in just a second. Bonds, not really much of a factor for the day, and the VIX actually declined just a little bit, even though it kind of picked up there at the end of the day in the last hour of the session. So really, theme of the day, you got a couple things still playing out here. And I think it's not at this point, these things are not a major shock, right? I've got Dow over the Qs. That just continues to outperform, and value versus growth. So before we get into like the price action and looking at the standalone charts for the S&P and some of the other ones as well, I think a couple of these relationship charts are really something to focus on for now, right? In my opinion. So this is value versus growth. We've been showing this chart over the last couple days in these end of day videos, but I'm getting still I still see a lot of traders just saying, oh, this doesn't make sense. A company reports good earnings numbers and the stock goes down, and I just think that there are no incremental buyers left in growth. There's a lot of institutional selling, right? And they're taking money and they're going other places. And you just have to put this in perspective, and that's why I bring up, what do I have? I think I have a 3-year chart or 2-year chart. We can extend that to 3 years, right? So value versus growth really got beat up over the last year. These are things that we know about, and we have right now a reversion to the mean going on, and we haven't really taken out this level, but certainly this week we are seeing a lot of value outperform. So again, what is value? If you're not familiar with that, or cyclicals, but it's the financials, it's materials, it's commodities, it's industrials, it's mining material. I said materials, right? But mining, right? Obviously the steel names, right? So those are the names that are doing very well. Energy, right, is another area too. So if you're really neutral and you can kind of look past what area of the market you're trading, if you just basically cover up the ticker on your chart, you're going to find a bunch of really nice breakouts occurring. They're just not in the names that were very popular last year. I still see traders having a tough time getting over this, and I get it. A lot of people have become just straight up growth traders. Well, these things go in cycles, guys, right? It does. I was talking to somebody who's not a trader for a living, and they said, "Hey, what's going on? I hear all this talk from the Fed, and obviously Janet Yellen spoke yesterday, and they're talking about the possibility. It seems like they are, in my opinion, it seems like they're testing the waters, right, and seeing what the reaction is to say, oops, I didn't mean to say that about we might be, we're going to have to start tapering at some point, or moving interest rates, and then they backpedal. Oh, well, I didn't mean to say that, but I think they're testing the waters a little bit to see what the market reaction is. And what you have going on is traders are starting to kind of make up their minds. When I say traders, I'm really talking about big, institutional investors, right? So the institutions that really drive the market, they are making decisions, and they're saying, "Hey, I had too many positions in growth. Let me get out of these growth names that are going to be a little bit more sensitive to interest rate increases, and they're going into things that are cheaper, right? That are not going to be as sensitive to interest rate increases, or that might actually do well when they increase interest rates, like financials. Okay. So that's kind of my market take, and just noticing, all these Fed speakers. It, in my opinion, they're annoying. It's annoying to hear 5 different Fed speakers all kind of say the same thing, in slightly different words. I mean, just make one message and be done with it. Enough with this every day. Another Fed speaker comes out and has to say it in a different way. Guys, just put together one message and, get on with it, and let everybody do, let the markets go where they want to go. So that's my little rant on the Fed. But I'm just tired of hearing Fed speakers every day, talk about the employment and inflation and about, what the economy is doing. Just send a message and get over it. So that is value versus growth. Another chart, because I had a few questions about the Qs, and we'll go over the Qs chart. But again, take a look at the 3-year chart of SPY versus the Qs. What do you see? That SPY in the numerator, Qs in the denominator. This trend has been going this way for a while, but look at what happened in last year because of COVID and working from home and not being able to do things. All the software, high growth areas of the market that did well in that environment, right? That trade is coming undone a little bit, right? And we're seeing a reversion to the mean. So, where would logically this trend, even if it stays in a downtrend, SPYs over Qs, where could it revert back to? Right now the ratio is 1.26, but doesn't it, like a 1.35 or a 1.4 kind of makes sense in that chart? And if your answer is yes, then what has to happen? More selling in high growth names and more buying in financials and industrials and in materials, right? And a couple other of those sectors too, right? So that's what you have to kind of deal with. Right, and notice it doesn't have to happen in a straight line. There could be counter rallies like we saw about a week and a half ago with growth. Right, this was the SPYs outperforming Qs, and then it took a little bit of a breather for a couple weeks. Right, so now we're starting to see this reset again. Again, doesn't necessarily have to be a straight line, and I could be wrong. Maybe we won't see 135 or 140, but that's kind of, I think if you take a look at these two charts, right, the SPY versus the Qs and value versus growth, put them together and then look at the price action that you're seeing. They kind of, they go hand in hand together, right? So JP Morgan just starting to break out, right? One name that I've been long for a little while, KeyBank, breaking out. Goldman. I'll wait for the Goldman chart here for a second. Breaking out, right? Look at things like FCX, making another new high today. Tech Resources, making another new high today. Right, we talked about this one in yesterday's United Rentals. Now this one didn't close on the highs, but still. So do you kind of get the, so I do these videos for a number of reasons, but the goal is to try to help people, right, and see where the trends are and so forth. I mean, I've been doing this for a long time. I've been an institutional trader for a long time, trading ETFs, and ETFs, having to be well versed in all different types. There's an ETF for everything. So it kind of makes you get familiar with emerging markets, international developed markets, right? And all those countries that go into those, all the different sectors, all the different subsectors. So it really has helped me be able to kind of pick up on, first of all, how these things work and how there's rotations that happen in the market, and then following the trends, right? So, I try and then to kind of couple that experience with being objective and being a disciplined trader, I tend to try to go wherever there's momentum in the market, wherever there's a trend. That's where I'm going to put down my chips. Right, I'm going to put some money, where those things are starting to trend. So that to me is better than no areas of the market outperforming. Right, we saw this back in the so we go now. If we look at the S&P chart, and when we went sideways for the last 2 weeks, and this is a little bit more evident, when you bring up the 1 hour chart of the S&P, when we go sideways for a couple weeks and there's not much things outperforming, that is a really dull market to me. Where some things are outperforming and other things are underperforming, at least there's some trading opportunities to do in that. And I think that's what we have. By the way, looking at this overall chart here in the S&P, you go back to the daily chart and you'll notice that we're inside value for the month, right? We started obviously trying to break higher. We didn't. So right now we're still in a very choppy territory of the market. And bottom line, you just kind of have to be patient and really pay attention to how much you have exposed to the market, and also each time you enter a trade, making sure that you put a downside alert so that when the trade is not working, right? And that's kind of how it always should be. But I think really in this environment, as we're going sideways and some things are breaking up and some things are breaking down. Also, we've talked a lot about, and I spent a lot of time on these 1 hour charts. This was our reversal off the low, off of this virgin point of control. So a high volume pivot point. And then we rallied back here, mostly in the overnight session, but right into resistance. Right, so that's another area where it's a pivot area. So 41.71, as I kind of thought this morning, and what I was telling members is that I'm going to be selling on the open, not looking for new trades, and then waiting to see how things kind of materialized and what areas of the market were going to outperform. All right. There's a tendency with retail traders to rush in the first 10 minutes, right? That doesn't work most days. If you're lucky, sometimes in the first 5 minutes, you'll get something that's a trend, trending for the day. But for the most part, waiting a little bit and waiting for some of those trends to materialize, I think, is a better approach. So that's where we are now. We're kind of in no man's land. Right? I can't, it's really tough to draw a conclusion when we're inside value and then we're also below value, just below value, and back into the 3-week range that we've been in, right in here. So for now, you can't really, stick your neck out and draw, a lot of conclusions, directionally, for the overall market. Now, if we look at the Qs, they are pointing down. You've got a moving average downside crossover, the 5-period crossing below the 20, and you've got 50-day moving average support for now. Okay, but I for now, and my view changes day to day based on how the market is changing, but this doesn't look like a great place to really be in, right? And a lot of things are falling and the Qs isn't 100% growth, but it's a lot of growth. But I think you just kind of have to be patient and let these things go where they want to go, right? And sell, when some of these things rip a little bit to the upside, you sell them, right? PayPal will be in it, and that was the case with Zillow, right? After hours, right? Now, I didn't do that, right? But just sold off all day long, right? So that is not good price action to go after. PayPal is up after hours. Let's see if this can hold the gains, even though this is just basically back to where it was 2 days ago. So I don't really view this as a great. It's nice that it's up, but sorry, but a little bit of curb your enthusiasm. It's basically back to where it was a couple days ago, right? And it's not taking back the short-term uptrend. By the way, nice VPOC takeout here to the downside off of this. All right, so that's a couple names for earnings, and there are a couple nice ones. I think Hubs is up, but this is up to 518, so it's another one. Right, this is one of my favorite names in the software space, but have to wait for the selling to be done here. All right, so let's get to some of my trades and some of the things that I've been talking about. Um, I was in a Google call spread. I felt really lucky, to get out of that trade from yesterday. I wanted to take a shot once Google filled the gap from earnings, so I didn't hesitate. I got out of this one a minute after the open, and then I wanted to see, of course, which way it was going to go from there. It didn't look great, so I got out of the rest of the trade. And then, like I said, was busy trying to take targets. I tried a little bit of HLT, because some of the value names have been pretty good to buy. But look at what I did with HLT. Right? I bought this thing on a little bit of a dip pre-market, and then I sold it out. Right? It's not going to work. It's not going to work. Right? And small losses I have no problem with. Big losses, that is where I have a problem with. All right, I got out of my STLD trade, right? The steel. I just think at this point, the steel has been absolutely on fire for the last week. Sometimes I like to keep the last portion of the trade on a little bit longer because there's no sell signal, but I'm okay taking profits on this STLD, and I actually still own this name in the TTG Trend Portfolio. I did get into JP Morgan. You've heard me, if you've been watching my videos, I probably have talked about JP Morgan maybe 3 out of 4 videos. But it finally looks like it's starting to go here a little bit. And I did take some targets on that. KeyBank, that's a name I've been holding for a while, broke out. FCX, I think I already went over the chart in the beginning of the video, but I'm going to try to stay long this thing for a little bit longer. Right? Would love to see this thing get up to 44 and then maybe even 50. I like this Tech Resources a lot. Take a look at the volume on this breakout. Big, nice looking volume on that bar. That's what you want to see on a breakout, in my opinion. All right, so watch for this thing. Right, and again, you got to zoom out a little bit. See that these things are not even back to where they were, back in this level. So you got commodities raging right now, and some of the stocks are not back to where they were a year and a half, 2 years ago. Energy, right? I took a target in my XLE trade that I added from yesterday, right? And then I added a couple things as I'm taking things off. This one I couldn't, I decided to take off these material names, Summit Materials. You got to break out here. I may have been a little bit early, or just, I'm really being cognizant of my overall risk here. So I did exit this trade. I'll revisit it tomorrow. It does report in about a week. And then, and if you look at this group, Eagle Materials is trying to break out. What's the other one that reported the other day, which I'm forgetting? I can't think of the name, but if it comes back to me, I'll bring it back up. What else? So JP Morgan. I took a stop on this NEE where we saw big call activity. Again, I have a love-hate relationship with call activity, but here's another one that did not working. Closed almost on the lows of the day. Big calls that go up. Again, I'm finding many more opportunities in names that don't have call activity. Right? They just, just by doing just scanning through charts, looking at some new high lists, you're going to find these names. All right, and that's pretty much it. Dow is another one too that we talked about yesterday. Breakout. The chart, it's crazy in some of these chemical names, but Dow, and look at LYB, almost exactly the same chart. All right, but Dow, nice break higher here, and I took one target, and I'm remaining long. Again, look at this. Look at the base in this thing. So maybe this thing can get up to 73. That would be my ultimate target for Dow Chemical. All right, guys. So that is it for today's video. A couple other names in the financial group. I think this Cohen. I actually got long this thing today on the breakout of value. Earnings is now behind with this one too. That's been the other challenge, over the last couple weeks is sometimes you see a nice looking name and you got earnings, a day away. And, I don't want personally a lot of earnings risk in a swing trade. So you kind of had to just, continue to watch some of these names and watch how they behave on earnings because some of the value names have been pretty good to buy on the dip after earnings. Deere's another one to watch, although this name is struggling with breaking out of value. You can set an alert to 383 to look for a resuming in the trend here, but I think this thing has spent enough time going sideways, right? The price caught up with the 50-day moving average. So it may be ready for that next leg higher. So that's another name that I'm watching pretty closely. All right, guys, have a great night. I hope these videos help to kind of explain where there's momentum right now in the market and where there are things that are trending. If this helps, hit the like button on the video. I appreciate that. Have a great night, everybody. See you tomorrow.